Okay guys, in this video I'm going to be talking exactly the reason why you could be failing your Forex trading funded challenges. You might be consistent on a small account, you might be making good money, but when it comes to doing these challenges, you're struggling. So I'm going to go over the reasons why that could be, how to fix that. So yeah, if you get value from the video, make sure you like, comment, subscribe, and let's get into the video. So the first reason you could be failing, and this is what I've seen from experience, is you're changing your trading style because you just want to get this funded account. So obviously people adapt their trading style to the funding because naturally, if you have a time limit to achieve it in, you can't always be conservative. You have to go more risky, so people up their risk. But they're also just wanting to quickly get this. It's a quick validation on to quickly get an account. They're not looking to do it sustainably, so they're changing they're trading more of intuition. They're not sticking to their mechanical rules. They're not being patient. They're fearful because they want to make sure that they get the account and don't want to miss trades. Or if they have a few losses, they panic and they're in drawdown. Oh, I'm so far away from the 10% target. So what you need to do is you need to stick exactly to the rules that you set before. The reason why you got into a position to be able to do the funding, or you feel ready to do the funding, is because you're in a good position, you're a consistent trader, and what got you to consistency was sticking to your trading plan, executing the trades that you know you should take. You have a back-tested plan that you know works, and you know that it's going to be it can provide and produce long-term consistent results if you stick to that plan. And so it's sticking to that, not getting blindsided by someone made 20%. Oh, what happens if I could have made 20,000, I could have made £10,000, whatever it may be. You need to think of the process, not the outcome. So the process is stick to your trading plan, as you know you should, and that will give you the edge long term. Don't get sort of blindsided by the money and thinking, oh, if I can pass it in one day. A lot of these prop firms now have unlimited time, so you can take your time. Before, you were having to, I understand you're having to maybe over risk a little bit, maybe instead of doing 1% risk, maybe 1.5 or 2% per trade. So if you're in drawdown, it can be emotional for you, but if you stick to your trading plan, even if it takes you 2 months, don't expect to get it so quick. Look over a 2-3 month period. If you've got 3% profit, 4% profit, 3% profit, you would have got the 10% return. So look long term, look at slowly building the account month per month. Don't over risk and stick to your trading plan. That's the biggest thing. People aren't sticking to their plan. They're just trying to take trades that they assume might play out, and because they want to get the money quick. Most of the reason why people are struggling to get these accounts is because of psychology. You know, a lot of these traders, when you talk to them, they have the knowledge. I've been in this position. You know, you have the knowledge, you have the skill set. I can back test, I can go on demo accounts and get the results. But there's something fundamentally holding people back when they're not able to execute the trades, and that comes down to fear and greed. I tended to be more fearful, so I was more hesitant to execute trades. If I had a few losses in a row, I would struggle to execute these trades because I'd sit there and there'd be a perfect setup, but I'd talk myself out of it, or I'd sit there and go, oh, well, I'm not going to take that trade. What happens if it fails? What happens if I go even more in drawdown? And that's just me, and I learned that through experience and through over time that that's the way I was. So I had to fix that, and I fixed that by sticking to a mechanical trading plan. I knew I got experience, I had tested data, I looked at myself and thought, okay, I need to change this. But there's people the other way that are more risky. You know, I had friends that were not doing the same type of trading as me, but I know people in the community that I was in, they were trading like stocks and other things, but it was still, some of them were Forex as well actually, but it was the same principles where they were more risky. So they were taking trades, doubling the risk, tripling the risk, taking low probability setups, and they weren't fearful about, like I was fearful, they weren't fearful about losing. If they lost a few, they were like, right, I'm doubling the risk, I'm going to make it all back in this one trade, and they'd blow their account even more. Or they'd go up massively, have euphoria, think they know what they're doing, think, oh, I'm going to make loads of money from it, and then when you have a drawdown period, they've over-risked, and they've blown a lot of their account. So you have to firstly identify what side of the spectrum you're on. Are you more fearful? Are you more greedy? And once you know what side you're on, you can then try and work through to fix that. Okay, another reason why you could be failing is simply because you're entering them and trying to do it too soon. I see a lot of people in the free Discord group I've got below, and some of them are on about doing funding, and I don't know if they're ready or not, but judging on the experience that they've got, it seems like they're not ready, and they're just trying to, now these like when I first started, the funding wasn't about. So I had to get consistent, and I had to look to scale up my own capital. My capital was at risk, but now people can pay for these challenges, and you're getting a large amount of capital if you pass. People are thinking, oh, I'll try it. It's only a couple £100. I can get 50k. I can get this. So they're entering way too soon. You're not ready to do it. You haven't hit the requirements of the account. You know, you haven't hit the requirements that the prop firms want on your own personal account. So what's to say then you're just going to get lucky and do it? And even if you do get lucky, this is the point. If you get lucky and you get the account, how likely is it you're going to not breach any drawdown restrictions, and you're going to blow the account and have to give the account back? So it might be quite simple, but you have to reflect and not look too far ahead. Yes, 1 year you could learn the skill for 3-4 years, not make much money, but get consistent on a small account. And then when you scale up to a large amount of capital, that 1 year can make more money than everyone else around you. But you can't rush that process, because if you do, you're not going to be able to consistently make money, and you're going to blow the account. So I see a lot of people, they're entering the funding too quick. Then they've only just got into trading, they've just learned the skill, they don't really know what they're doing. They're having good months and bad months, but they're not consistent. They can't explain their strategy or how their edge works, and they're not knowledgeable and haven't got the experience, and they're trying to do it too soon. So nothing wrong with doing it and failing. You're not always going to pass the first time. But my point is, don't rush this process. Take your time, learn the skill set. It's like any business or job. It's going to take years to learn it. But once you've learned it, then go for the funding and scale up. Like any business, you get the capital, you see proof of concept, and then you scale up your capital when business is going well and you've got a demand. Same with trading. Once you know what you're doing and you're making consistent returns on a smaller account, right, okay, now I might look to scale up. So I think that's massively important, because people are rushing this process and then they're failing, and then they're thinking they're spending so much money. If they're doing 10 challenges at £200, it's £2,000 they're spending on challenges, when they could be putting that into education, putting that into learning and improving the skill set, improving their trading setup, improving yourself as a trader. So don't rush this process, and that's what I see a lot of people do. And also I see a lot of people, they treat prop firms as like gambling, it's like £300-400 or £200-300 for 100k. And people think, right, if I can pass this and then I get the account, and they go extremely risky because they're thinking, oh, this is free money, look how much money I could make, now I've got the account, or if I just get this account, and they're looking at it the wrong way. You need to look at it as you're showing the prop firm that you've got the skill set required, and that means sticking to the skill set that you gained over these years, not changing anything, sticking to what you know works. And like I said in the previous clips, trading plan massively important, sticking to that, not getting impatient because you think, oh, I want to get this account quick. Looking long term, like I said, now these time limits have gone on these prop firms. For most prop firms, you're able to have a lot less, you've got unlimited time to hit the target. So just gradually get there, and don't change, like I said, don't change the way you trade based on a prop firm, based on the capital size. Another thing also, people are, because they're used to smaller accounts, they might be consistent. Like I was consistent on a £500 account. That's how I learned the skill set. But then when you scale up, as much as you have this, it's the same trade, it's the same skill set. Psychologically, the numbers are a lot higher. So when you're trading a 100k account, let's say you're going for 6 figures, instead of 1% of that's £1,000. So if you're down to like 1% on the account, or you're fluctuating at 0.5%, you've got £500-700 roaming up and down. Or when you're up, if you're up 2-3%, you're up £2,000-3,000. When you're trading a smaller account, although it's the same, like I said, same skill set, same execution of trade, same management, you're not used to seeing those numbers fluctuate, and that can mess up with your your emotions. So you could take a trade, it could be in profit, it's pulled back from your target, so it's going up, your target's here, it pulls back, you might execute quick or close the trade quick because you're like, oh, I'm up 700. But that's not part of your management plan. In £700 on a 100k account, it's only 0.7% profit. So you wouldn't take 0.7% profit on a £500 account, but you're taking that because that £700 becomes real. It becomes, oh, well, look what I could spend this on. So people change their management plan, they change that, and that goes back to not sticking to the trading plan because of their money. And that's quite natural. If you see large amounts of numbers fluctuating on an account, you're going to get a little bit, you have to get used to that. And same when you're in drawdown, seeing a big drawdown, although prop firms aren't your own capital, it's still that psychological aspect of you're in heavy drawdown. So yeah, I hope you guys got value from this video. If you did, please like, comment and subscribe, I'd appreciate it. And I'll see you guys in the next video.